So have you ever wondered why there's so much paperwork required as part of the home loan process? We're going to talk about it this week on This Week's Homebuyer Radio.
This is Homebuyer Radio with home loan expert Dan Morales. Dan has been one of the nation's leading mortgage lenders since 1991, and weekly he shares with you valuable insight into the home buying process. Whether it's your first home or not, Dan will help you have a better understanding of the home buying process. Let's get started with this week's episode. Dan, what do you have for us this week?
Hey, thanks, Pat. It's Dan Morales. This is Homebuyer Radio. It is episode number 180, and it is February 20, 2022. So a lot of times, clients are surprised when they start the home loan process at the amount of documentation that's required as part of the process of getting a loan approved. Now, it can be a little misleading sometimes because what happens is, you see these TV commercials or you see these online lenders that say, hey, fill out this form and we're going to give you, an instantaneous approval and you're good to go and, you can go house shopping immediately, right? Well, sometimes it is, believe it or not, it can be that simple, and other times it is not that simple. And more often than not, it's the other times it's not that simple. So what happens with the home loan process, everything has to be verified, okay? So as part of getting a legitimate approval, a lender has to verify your source of income, the consistency of it, the likelihood of it continuing, and just the amount of it, right? So, source of income, the assets, credit history, there's all these components that go into, making a successful mortgage when it's all said and done. And it requires a ton of documentation in most cases. Now, in some cases, we're able to verify your employment if your employer verifies through a third-party service. Now, there's a number of these third-party services, but the most common one is a service that's called the work number. And so what happens is, a lender is able to, when you complete your application and you give your authorization, oftentimes based on your Social Security number, we're able to go through and verify whether or not there's a record that exists for you in the work number. And if your company reports the work number, we can oftentimes get your employment information from the work number. Now, in some cases, that's good enough for proof of income and you're good to go. However, let's say you have some overtime and bonus and you have maybe variable compensation, some types of incentives or commissions or stuff like that, where your company reports the work number, but the problem with the work number is sometimes it can be garbage in, garbage out, meaning that your company reports, maybe a lump sum and it's impossible for a lender to be able to tell what you really make based on the information that we get from the work number. And this happens more often than not, especially when clients have variable, sources of income, meaning that they have bonuses or they have commissions or they have some type of incentive pay, that it can be difficult to figure out how much is your actual base pay, how much is, let's say, bonus or incentive pay, and what can I really count towards qualifying you. Now, if we just took the information that they gave us and we issued a pre-approval based on that information, and then we later discover that based on, a little bit deeper dive into the sources of income, perhaps we can't count some of that income when we qualify you. And now your pre-approval is not any good, right? So, just because you can verify some of that stuff electronically doesn't always mean that you can count it or that it can be used as part of the, loan approval process. So that is one way that we can get information quickly, but it can be a case of garbage in, garbage out, where even though we can verify your income, let's say electronically, we might still come back to you and say, hey, we need to get some pay stubs, W-2s, maybe some additional income documentation so that we can truly figure out what amount of income we have to be able to qualify you. Now, this can be frustrating for clients. Like, why do you ask for this documentation? Well, it's being able to make sure we can give you a rock solid pre-approval. Like, I'd rather get that information up front and make sure that we can get your loan approved versus, hey, no problem, you're good to go. You go out there, you find a house, and we get into the loan process, and then we discover, oh, hey, we can't count some of this income, and now you're no longer approved, and your hopes and dreams have just been shattered. So we don't like to do that, and we don't do that because we're experienced and we know what we're doing. So we go through and we verify that stuff up front as part of the pre-approval process to make sure that you have a legitimate approval that's been properly vetted and you're good to go. Now, the same thing can be true when it comes to assets. Now, a lot of times people are more hesitant, to allow us to verify assets electronically. Most lenders have the ability to verify your bank account balances and assets electronically. However, as part of the, if you will, application process, it requires you to give us the ability to verify that information with your bank directly. Now, in most cases, how you do that is you sign into your bank's portal through our portal, which allows us to be able to pull your account information, verify the funds that you have, and your, if you will, current balance and account history and good stuff like that. Now, what happens is a lot of clients, in the process of doing that, think that somehow that gives us access to their bank accounts where we can, go and transfer balances and stuff like that. Now, it just gives us the ability to see what you have in the bank and what your most recent account history is. So that way we know whether or not you actually have enough money to close your transaction, and if you had any large or unusual deposits into your account that we may not be able to count because of the requirements that go into the mortgage process. So, even though you can, if you will, get some of this stuff done electronically, and it would seem like it could be a little bit quicker, a little bit faster, when we look at those account deposits and stuff like that, we might go through and ask you for some additional information to be able to verify where funds came from. And, did you transfer a bunch of money back and forth between accounts, and can we connect the dots as part of that process to be able to prove that you actually have enough money to close? So what does that all require? It requires documentation, right? So, if you think that you're going to be in the process to buy a house or get a mortgage, one of the things that you can do to make life a lot easier for you is save all of your pay stubs, your W-2s, your bank statements, all of your, 401k statements, all of your financial documents. Keep those things handy so that if the bank needs them as part of the approval process, you can have those documents readily available and you can shoot them over quickly. Now, we don't always need tax returns, but sometimes we do, so having tax returns and W-2s and bank statements and check stubs and all of that stuff is super helpful. And one of the other things that you can do that will help us as well too is if you're somebody who's used to transferring funds back and forth between accounts, and you do that on a pretty regular basis, and you got money going here, there, everywhere, that kind of stuff can make your banker's job much more difficult, because what happens is we have to go through and connect the dots and be able to show that the money that you need for down payment and closing cost, that you actually have it. And we have to be able to show where it came from, right? So if you saved it or you put it into one account and you transferred it through, 10, 15 different accounts and eventually it ended up in one account where you have enough money to close, that's fine and dandy, but it becomes a lot of work for the lender to backtrack and be able to show where that money came from and how it got there, okay? So if you are going to buy a house, maybe try to keep your transfer activity to a minimum and make it as quick and easy for your lender as you can, because at the end of the day, if you don't, you will be part of the process of being able to connect those dots when we go through and say, okay, great, I need all of your different bank statements, and I need to be able to show where the deposits came from that went into those different bank statements and so on. So you can actually complicate things for yourself when you're transferring funds all over the place. So documentation, why is it required? Because we have to connect all those dots when it comes to your assets for down payment and closing cost. We have to be able to connect the dots when it comes to your sources of income and being able to document you have enough income to get across the finish line. Why do you need all this as part of the pre-approval process? I can go to this website, punch in my information, and they'll tell me that I'm pre-approved, blah, blah, blah. Yeah, you're pre-approved based on the information you put in, and that's what they're going to tell you is you're pre-approved based on that information. So garbage in, garbage out. And that's why a lot of times when you get pre-approved from some of these large national, well-known lenders, that's one of the reasons why a lot of times those pre-approvals are looked at negatively by real estate agents, because they know that you're not properly vetted. You haven't gone through the process and provided the correct documentation and information. And so agents oftentimes don't trust a pre-approval letter from some of these large, well-known companies that they're well-known because of all of the advertising they do, but they're also well-known for not delivering when it's all said and done. So really important that you work with somebody who knows the process inside and out, who's going to educate you on what they need, why they need it, and they're able to offer you a rock-solid pre-approval. And those rock-solid, well-documented pre-approvals go a long way when your lender can verify that, yes, we verified their income. Yes, we have a true, legitimate pre-approval, through a valid underwriter. Yes, we verified they have enough cash to close. We've done all of that stuff. And so when I have a conversation with not only your agent, but the listing agent, I can verify that we've done all of those things and you have a rock-solid approval. And really all we need to do is get a house under contract, get an appraisal, title work, and we close. So you can be a big part of having a successful transaction by going through and, keeping your financial documents or your financial documentation in order, if you will, and by making sure you're cooperating and providing that information so that as we ask for that stuff, we have it so that we can get you that fast pre-approval and we can move quickly. Hey, I'm Dan Morales, America's Mortgage Man. Thanks for listening to the podcast. We'll be back next week with another episode. Hope you enjoyed. Have a great week.
Homebuyer Radio is a production of Dan Morales, home lending expert with North Point Bank, NMLS number 709729. Dan can be reached at 616-931-4629 or online at danmorales.com. Thanks for listening, and we invite your questions and show ideas at homebuyerradio.com. All loans are subject to credit approval. This is not a commitment to lend. North Point Bank is an equal housing lender, all rights reserved.